All right. So, hi everyone. Thank you for joining today. Let me just open the chat box, and before we start, just a quick disclaimer about the trading room. Today's webinar, as always, the trading room is only for educational purposes. If I take any trade, which I usually don't on Mondays, but if I do take any trade, it's, again, only for educational purposes, not as a signal to buy, to sell, or to close any trade. Of course, you're more than welcome to ask questions, but any analysis is just my opinion about the market. And the analysis is, obviously just an opinion, not something that should be used, and you should always do your own analysis and risk management. If you have any questions, please feel free to post them in the chat box. And if you want other participants to see them, just make sure to send them to hosts and panelists together. So, as always, on Monday, we usually do a quick market review, and I'll quickly go over the majors. Of course, if you have any comments, if you have any questions about anything I show, feel free to post it or ask. And if you want to review other currency pairs, let me know. I have to say that as I was going over the currency pairs before today's webinar, it was for me, quite unclear. The market direction was a little bit unclear because many of the currency pairs are going sideways, at least on the mid to long term, like the daily charts, the weekly charts, some of them. And as you'll see in many of them, we are currently in zones that have been ranging before and are expected to range for a few days or even a few weeks now as well. So it looks like the market is looking for a direction. There's some sort of an indecision at the moment. The stock market, the indices, commodities, it's been going up obviously for months, but in the last few days also been going down. And usually when the market is going down, the dollar is gaining strength, and the other currencies are weakening against the dollar. We'll see it here. But again, for now, the long-term direction of the market is still bullish. Maybe there's an imminent correction, but it should, if there are strong movements in the equities market, it will definitely affect also the Forex market. So just be aware of what's going on in the, with the major indices like the US indices, the S&P, NASDAQ, etc., Dow, Russell. So let's start with the euro dollar. And as you can see on the weekly chart, at the moment, it's ranging inside. Let me just show you the mouse. Okay, so it's ranging. It's been ranging up and down in the last few weeks in a zone where it has been ranging before last year. So this zone is a ranging zone, and it's expected to range, I guess, for a few more days or even weeks. Just be aware of that for those who are, swing trading. As for the daily chart, this is actually this rectangle. I drew it already this morning. I painted it just because there is a zone here of buyers and here as well. And it reached this zone earlier today and reacted again. You can see here some sort of a swap zone. Okay, so buyers all around here as well. And for those who are looking for trades in euro dollar for the short term, obviously at the moment it's still bearish. Just be aware of this zone in case it starts forming or reversing and heading up again, because there is some sort of a reversal pattern here. I'm sure there's also a bullish divergence in some of the oscillators, but there's sort of an engulfing candle here on the hourly chart. So just be aware of this zone. Again, I drew it on the daily chart just because of this area, okay, where there are lots of buyers that were previously buyers again. Obviously, on the weekly chart, the trend is not very clear, but it looks like there is pressure from above, and overall the euro looks a little bit weaker than the dollar, especially after this double top. And the question is, will it be able to break this double top? The pattern is not super clear because, yeah, well, you can say there's a line here to break in order to complete the pattern. On the other hand, there's also the middle of the pattern is somewhere around here as well. But the overall trend at the moment is not super clear because there's a lower high and sort of a lower low, but not a confirmed or a strong lower low. I would prefer, in order for the pattern to be completed, or in order for me to be convinced that the euro dollar is going lower, to see this zone of around 116 being broken, and even preferably being tested from below before continuing lower. This is the long term. Again, on the shorter term, the trend at the moment is bearish, but just pay attention to this zone, and you see this very strong candle here. I think it was from from the end of August. Just be aware of the buyer's pressure around this area before taking or before going short, if this is where you're headed. As for pound dollar, also, again, and like I said, many of the pairs are in a ranging zone at the moment, so I can't be very decisive about the swing direction for the moment. So I'll try to look for shorter time frames. But on the daily chart, the demand zone is just below, around 136, more or less, and we have some supply zones around here. Okay, you can see, well, there's a supply zone here and another one right below, so pretty much this is the supply zone, and it's ranging in between. So again, for swing traders, just wait for the pair to take a decisive direction. As for the shorter time frame, if I were, well, again, as you can see at the moment, it's pretty much ranging. There is no clear direction. If you're looking to trade the pound dollar or pound pairs, try to look for breakouts and retests, or supply and demand areas, or moving averages that serve as support and resistance. For example, if you're looking for, let's say here you see some sort of a demand zone and then price tested with a pin bar, you can try to go long for a while. Or, for example, let's even go to shorter time frames for those of you who are looking for shorter time frame trades. So I would be looking for long around here. Maybe I would be, here there's a supply zone. Here there's a supply zone. But again, these are short time frames for those of you who are looking just for short-term trades. Another option is to wait for breakout and retest. For example, let's say here, okay, there's a high, an attempt to break out, a breakout, a retest around here. Well, not a perfect retest, okay? And only then take the trade. And again, not always, it doesn't always succeed. Here, for example, if you take the trade around the top of this candle as a retest, it breaks, but then if it closes below, or even if you place your stop loss just below the low of this candle, or wait for it to close, then you're out with a minimal loss. So these trades are the safest, breakout and retest. And again, for the pound dollar, generally at the moment, trend is unclear. So just be careful if you're looking for trades on pound pairs. Dollar yen also ranging in between supply and demand for a few days now, almost a month. Not easy to trade in for swing traders. For short-term traders, you can always look for swift moves around moving averages, for example, and of course also breakouts. For example, I don't know, you have a trend line broken, retested, the moving averages are already bearish, and you go short. Okay, that's one option. Another option is to wait for retests around areas of supply and demand. Okay, for example, here, sort of like an intermediate supply tested and going down. Okay, so in pairs where the trend is not clear, just look for the short-term trends on the short time frames, but be quick to cut your losses and be quick to take your profits. Okay, another example, 5-minute chart. Okay, you can you see that it's been broken. Here it's not even retested. It would be perfect if it were retested. In this case, the moving average is serving as the dynamic support. So you can either wait for retest of the moving averages or wait for retests and breakouts of intermediate zones like flags. Okay, usually when a trend starts with these moving averages, lots of times there are flags around the moving averages. But as I said, dollar yen as well in an unclear trend. It's basically ranging sideways, which makes, since the pound yen, the pound dollar and the dollar yen are pretty much ranging, I would also be careful with the pound yen, even though I'll speak about the yen pairs in a minute. But as you can see, it's been ranging in the last few days as well. So just be aware of the indecision, okay, and try to take shorter time frames. And you can see those who are trading in the shorter time frames, like, or in the intermediate time frames, may find a lot of volatility, a lot of noise. So try to look for pairs with better direction, and we'll see a few of them, or a better trend. We'll see a few of them in a minute. Dollar Swiss is interesting, actually. Looks like it could be breaking out of a triangle on the daily chart. And on the weekly chart as well, maybe, I don't know, maybe there's like sort of a reverse Quasimodo or so. Okay, sort of like a crooked head and shoulders, but with a breakout. You see here, there's a lower low, but then a higher high, and then a retest of this sort of like a right shoulder retesting the area of the left shoulder. And I will talk about a retest in a minute, Enrique. But in any case, if the dollar Swiss closes above this trend line, it could try to go a little bit higher. I think, by the way, that the target for dollar Swiss could be, or like a good target for the dollar Swiss could be, obviously, first of all, the top of the triangle, but even more than that, this area, okay, sort of like this. Well, it's not a shoulder, but this zone, and you can see. Let me just increase it. Here, this point around here. Let me just annotate. Okay. Oops. Around here. Okay, you can see that it started going down, hesitation, breakdown, and then it went up. And this is the last point here before it broke massively or very strongly. So if I were to wait for or to set a target for dollar Swiss for the long term, like days or weeks, somewhere around here or around here, these are great points where sellers could be waiting. Okay, always pay attention to these areas, because these are the decision points, the real decision points of the buyers or the sellers, in this case the sellers. Okay, at the top of the wicks for the engulfing or the strong bearish candles, or at the bottom of the wicks for strong bullish candles. Okay, like here, if I were waiting for to go long inside this demand zone, this area is the decision point. So basically, if the dollar Swiss does close above this triangle and manages to go higher, this whole area somewhere in between these points could be the next target. Obviously, it has some other resistance areas along the way. What I would do is preferably wait for a retest of this trend line. And when I say a retest, Enrique, when we define retest in technical analysis, usually a breakout, a confirmed breakout would be closing of two candles above resistance or below support. So for example, here, one candle closed above, and then I want to see another candle closing above, and preferably even a few. But then a retest would be coming back to this trend line. And then, let me just, okay, coming back to this trend line, closing above it, even if it goes down, even if it goes below, but closes above it and then starts going up, then for me, that's a perfect retest. So you see here that it's not a convincing retest, okay? It closed above, but then it closed somewhere, and again, it's just a trend line. It's not on the pip, so I can't say if it closed immediately above or at the trend line, but I would prefer seeing two candles closing decisively or with conviction above the trend line, and then retesting, checking, touching the trend line and starting to go up. The entrance or the entry could be, I mean, let's say it goes here, and then let's say we have another candle here and even another one here. Okay, so preferably I would enter just above the candle or the close or the open. It depends what kind of a candle it is, but I would enter once the price goes above the retest candle. Okay. As for Swiss intervening, I heard about it, and I know that there were, rumors or talks about the SNB, the Swiss National Bank, intervening. With the Swiss, not sure exactly how, but I would, like a couple of weeks ago, maybe 3 weeks ago, when I was in the trading room, I mentioned this trend line, okay, the monthly trend line here. Yeah, it was, I think, before the end of August or something like that. And I mentioned this trend line, and I mentioned the Swiss bank intervening potentially if the Swiss pair or the Swiss currency would go or would become stronger. Actually, at the moment, as you can see, both from this pattern, the Swiss is losing strength. It's weakening against other pairs like the dollar, maybe like the euro, and in which case, I don't think the Swiss National Bank would have to intervene at the moment. Maybe just the talks about potential intervention started weakening the Swiss currency. So you can see on this chart that the Euro Swiss found or potentially support around this trend line. Very nice support. And now it's starting to go up. And it will be interesting to see if it manages to go above these moving averages and above, well, the moving averages are not that important, but I would say also around, well, above this area, more or less. Okay, you can see here, resistance, 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 and then a breach. It found some support, but then it broke again. If it manages to break out or break out above this zone again and even find support on top of the moving averages, then it could start moving higher again. Obviously, the more important area to break out of is this zone here, around here, more or less. But this is still far away. Again, unless the Swiss loses momentum fast or weakens fast, and then Euro Swiss could move fast as well. So that's for the Euro Swiss and the Dollar Swiss. Interesting to see. Let's see how this candle, the daily candle, closes, if it manages to close above this triangle. And Gabrielle, you're asking about the euro dollar. I spoke about it earlier. Again, what I mentioned is that there is some sort of a demand zone around here. Maybe, by the way, it could be a potential reverse head and shoulders, who knows? As you can see, maybe left shoulder, the head, okay, well, crooked head, but still some sort of a head, and then the right shoulder, potentially, okay? So who knows, maybe maybe we're now seeing the beginning of a right shoulder. If euro dollar closes below this zone, obviously it could continue lower all the way to this demand zone. All right, let's move on. So dollar yen, again, I spoke about it a little bit, but oh yeah, and dollar Swiss. Let's move on to the dollar CAD, dollar loonie. Obviously, it's a long-term move potentially, but dollar CAD is moving. Dollar CAD is moving from this monthly demand zone. For those of you, I remind those of you who haven't heard about it before, or haven't seen it. So this monthly demand zone, it moved very nicely once it was confirmed on the weekly chart. You can see here there was a long period of accumulation around this demand zone, and then a breakout, a retest of the moving averages, a breakout, and potentially it could continue moving up all the way to this reversal zone or this retest zone. You can see how you see here demand or support, demand here, also here, but then it was broken and then retested, and now it's been retested again. Currently, can't say exactly where dollar CAD is heading, where it's headed, but and you can see that the daily chart is not very clear. There was a strong reversal pattern here. Obviously, if oil continues moving higher above 70, it could strengthen the Canadian dollar, which means the dollar CAD will move lower. But first, it has to break below this this demand area. As you can see here, there's some sort of a local demand zone around here and a confirmation. So again, those of you who are looking to trade dollar CAD, preferably at the moment until there is a clear decision, just wait, either wait or look for shorter time frames, like you know, breakout and retest, or I don't know if you're trading moving sideways with Bollinger Bands, or trading trends with moving averages. Okay, for example, just as an example, here, okay, there is some sort of a breakout either of this level here or this trend line here. Well, actually, on the very short time frame, like the 5 minutes, it's been retested. Okay, so trend line, a breakout, a retest, a breakout. It's not a perfect pattern. Again, I prefer seeing 2 candles closing above. This is not necessarily a trade I would take. But here you can see how, if I remove this trend line, you can see, okay, we have some sort of a zone here, trying to break out of the zone and then breaking out and then retesting the zone and going down again, and now continuation. So breakouts and retests on any time frame are great, and they are the safest because you have a very clear place to set your stop loss. Okay, for example, if you're entering around here after it's been broken out, or entering even here or here somewhere, you can place your stop loss just above the candle that broke the zone, and then gradually trail it down in case of in case of a short trade. Yes, and Barry, you can watch all our webinars on our YouTube channel. So everything is recorded and everything can be watched on the YouTube channel. It's uploaded later on the day. And by the way, note that since we have some national holidays this week as well and next week, some of the trading room hours might be changed or like moved or completely canceled for a few days. So just look on your dashboard to see an updated the updated time of the trading room. I can't send you the link, Barry, because it hasn't been uploaded yet. You can just go to the 5ers YouTube channel a little bit later today or tomorrow and watch this and other recordings as well. I can't send you the link, but you can look on YouTube. You can just search for the 5ers, and you can also go to the 5ers website, and the resources under the About Us tab, I think has a link to the YouTube channel as well. Yeah, you know. So Tomer sent the YouTube link. Thank you, Tomer. All right, let's move on to Aussie dollar, and of course, Gabriela will also speak about Aussie Kiwi in a minute. After I'll speak about the Aussie and the Kiwi, I'll speak about the Aussie Kiwi itself. All right, so Aussie dollar, Aussie dollar made a very nice move from this demand zone. I was quite surprised to see it continue higher, because I thought it would just, retest this zone and then continue lower. But as you can see, it moved higher because this demand zone is a very strong demand zone, the weekly demand zone, and it reacted very, very nicely to it. So it's always, even if you're trading short-term trades, it's always worth looking at the higher time frames to be aware of the overall strength and the potential direction of the market. So Aussie dollar eventually broke above this zone, even tested it, and continued higher. And at the moment, I mean, it's interesting to see, because I think for the long term, after seeing this pattern, okay, sort of reversal pattern with this downtrend and then this doji candle, Aussie dollar could continue higher, okay, but it needs to first, well, again, it's a long term. On the monthly chart, I would prefer seeing a confirmation candle in order to confirm this reversal pattern. Obviously, if September closes negative or not strong enough, then Aussie dollar could continue lower, continuing the down move from this supply zone, the monthly supply zone. So this is just a long-term perspective. As for shorter time frames, again, daily could find more demand here, just like we saw on euro dollar. Okay, I remind you, it's a similar pattern. Euro dollar had demand around here during July, and Aussie dollar also had demand here around July. It broke down, went up again, just like euro dollar, broke down, went up again, and now it's retesting this demand zone. And actually also the moving averages could give it some support on the daily chart. Shorter time frames, again, wait for some clear direction. Obviously, as you can see at the moment, there is no clear direction. It's moving sideways. So only if you're looking for short, like quick scalps or quick trades. For example, here, okay, let's say we have a breakout of this resistance area. Okay, I would, let's see. Yeah, all right. So a potential breakout of this resistance, it tested, went down, went up again. And what I would want to see for a breakout confirmation is to see at least 2 candles closing above this line, and then a retest. At the moment, as you can see, it's still not closing above. Let's wait for a few more minutes, even on the 10-minute chart, and see if it manages to close above this resistance line. If it closes above, then perhaps we'll go long, but I want to see a clear confirmation. At the moment, still not confirmed. All right, so that's for the Aussie. Again, as I said, it could find support around this demand here and continue higher. A better conviction or a better signal for long would be if it closes above this line, okay, and the previous high around 0.74. That would be a better indication for to go long. All right, let's get back to the Aussie dollar in 5 minutes and see how it closes above this line. Kiwi, as you can see, looks a little bit stronger. It's now closed above. You see here, there is like resistance, a strong breakout, and then a breakdown, resistance again, resistance, resistance, and now it broke up and retest, plus maybe a potential reversal pattern, and it could start moving higher. And you can see the 9 moving average, the exponential moving average, serving as dynamic support as well. So Kiwi could start moving higher, and it would be interesting to see how it performs against all other pairs, because it looks a little bit more convincing. You can see here that it had from this supply zone, it had a reversal pattern. It went down, but it didn't continue. It went up, went down again, but then made some sort of a reversal pattern around here. Previous resistance, breakout, and retest. So we could see the Kiwi dollar moving higher again, maybe retesting this demand zone, this supply zone again, and maybe even breaking out. It could take weeks and months, but I'm just saying it's a potential direction because of this reversal pattern, because the moving averages are starting to push higher now. And even on the daily chart, it starts looking a little bit more convincing. However, you see there's pressure from sellers here around this area. There's pressure from sellers. So just be careful. Don't go long just like that here. Don't go long on the daily chart. Start looking, if you're looking for long, start looking for long only when you have clear support. For example, if let's say it crosses above, it closes above this, let's say it starts going higher and closes above here. Okay, above previous resistance, maybe even retesting and then continuing higher, then that would be a better conviction for long. Obviously, if it breaks below this zone, then it looks like there's a reversal, maybe even a double top and a continuation lower. So just wait for some confirmation, but overall, looks like Kiwi dollar is gaining some strength. But remember, we are talking about a monthly supply zone with some strong, very convincing or very powerful engulfing bearish candles. So it could, be just a retest before continuing lower. And the test case for me would be either breaking above this area, well, obviously above previous highs, but initially for the short time frame, breaking above this resistance or breaking below this demand zone, this reversal zone for the downside. So speaking about Aussie and Kiwi, let's just have a quick look about at Aussie Kiwi. And a few weeks ago, I spoke about this pair and said that the overall trend is bearish, and it continued moving lower. The demand zone, well, the strongest demand is around here. This is let's say the decision point, as you can see. Obviously, there's a much bigger demand zone around here, but this is a very big demand zone. But the more, just a sec, okay. This candle is where the buyers had their decision point. And below that, okay, there's also a reversal area around here, more or less. As you can see, support, breakdown, resistance, and then breaking up. So if Well, the price is actually very, very close to this area. Just pay attention in case you're going short. There are, signs or potential signs of maybe starting to accumulate in case there are buyers waiting around this switch zone. As for the shorter time frame, you can see that the buyers are starting to go in. Okay, this is a bullish engulfing candle, and they're starting now maybe to accumulate. Already here, there was some accumulation or some rejection from buyers, and again, potentially, it could reverse even before this area, because you can see that this whole zone is here. Let's just make it bigger. Okay, you can see here this zone, okay, this demand zone and resistance. So this whole area is a potential area of accumulation and buyers coming in. If you're still short, consider, moving your stop loss closer. If you're looking to go long, I would first wait for some confirmation. For example, closing above this area more or less would be a good, could be a good starting point. Obviously, you have, since it's a downtrend, you have lots and lots of supply zones above, so just be careful. But another potential setup, if you're looking for long trades, is to look for support or demand from the moving averages, especially once the moving averages reverse. So let's say, oh, by the way, I forgot to check the Aussie dollar. So let's say the moving averages reverse. Okay, we have something like this. They start going, the short moving average, and let's say the price starts going up and then down, testing the short moving average and starting to move up, then this could be an entry point with a stop loss below the short moving average or below the medium moving average. But always when you're looking for a reversal pattern, since the trend hasn't confirmed itself yet, wait to see or get some other confirmation signals and set your stop losses a little bit closer, because again, the overall trend is still bearish. So that's for the Aussie dollar. Again, potential reversal around here because of this reversal area around here. Let's just have a look at the Aussie dollar. Okay, so yeah, as you can see, it hasn't confirmed the reversal here. Okay, it could be looking for a reversal here, but again, I would prefer seeing the Aussie dollar going and closing above this resistance line before going long. And as I mentioned, lots at the beginning of the webinar, our trading room, most of the currency pairs are currently moving in a way kind of sideways, no clear trend, so just be careful. Euro pound, interesting. Euro pound found support earlier, like a couple of months ago, found support around this demand zone, nice demand zone. It had some support, but the overall trend was still bearish. It even broke below this demand zone, which pretty much negates it. But currently it has some, still some support from this area, or maybe just from the local demand zone that was formed around here. In any case, and this is the conviction point around here, the base of this candle. You see this strong candle. This is where the buyers are waiting, exactly here. So always pay attention to these candles. The chart speaks for itself, okay? Eventually, the big sellers or the big buyers can't hide. And when they come in and move the market, they leave footprints in the form of engulfing candles or long wicks. And this is your place to look for the safest trades. By the way, safest trades, but it doesn't mean necessarily entering with a touch. You can always wait for some confirmation. For example, you go to the shorter time frame, okay, and one method, okay, just one method as an example. You go for the shorter time frame. You see that the zone has been touched, or the trend line, or the support or resistance line. And there, let's say you see this reversal pattern, okay? A candle, but then sort of an engulfing candle forming some sort of a zone. One option is to enter at the end of the candle if it's not too big and the stop loss is not too far away, okay? Or you can always wait for the price to retest around 50% of the engulfing candle, of the confirmation candle. That's even safer, but it may make you miss some of the trades because the price could continue without you. But again, the idea here is to see the zone. Okay, in this case, this is the zone far away, or if I look at the candle, let's disregard this zone. I look at this candle, okay, this big candle here with which signifies buyers. Okay, the base of the candle is where the buyer is at. So here's the base of the candle. The price is coming close to the base of the candle. Okay, in this case, it didn't touch it, it touched the zone, but just for the sake of this example, and then you have some sort of an engulfing or maybe a pin bar. Either enter at the breach of the previous candle or at the close of the confirmation candle, which might be big and again may make your stop loss be even too big or too far away. Or if you want to be on the safest side, then wait for the for a retest candle of around 50% of the confirmation candle. Many times it gives you a trade, but sometimes it doesn't even test it. It just continues higher, and then you lose the trade or miss it. If you don't want to miss it, but don't want to risk too much, just take a small trade around the confirmation candle or the confirmation, let's say the confirmation line. When I say confirmation line, I mean the like the contact point or the conjunction between the previous candle and the confirmation candle. So once the confirmation candle crosses above the previous candle which touched or reached the test zone, once it crosses above it, you can take a small trade. And then if you get a retest, you can take another trade. So you can always just enter with a few entries that are a little bit smaller, and then you're on the safer side. On the one hand, you're not missing a trade in case it doesn't retest. On the other hand, if it does retest, you get a better entry. Okay, so that's for the euro pound. Let me just take back the demand zone. And by the way, if the euro pound goes even lower, then the most significant demand zone is just below, around here on the weekly chart. And the conviction or the decision point is here. Okay, this is the decision point for the euro pound in case it goes even lower. Okay, just very quickly, if you have any questions, please feel free to ask. I just want to say a few words about the yen pairs. I see a sort of a pattern, a long-term pattern for the yen pairs that could be interesting. You can see it, especially on the, well, the Swiss yen, maybe also pound yen, Kiwi yen as well, maybe Aussie yen. But let's have a look at the Swiss yen because it's interesting. And again, it's a long-term outlook, so you know, we'll have to wait and see. But what I see here is an uptrend with these moving averages. You can see it very clearly. An uptrend, a breakout of previous resistance areas. Okay, resistance, 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 lots of resistance areas, and then retest and breakout, and it could potentially retest from above. And so more or less, yeah, more or less, this is the resistance line. And you can see that it broke above it, retested it. Again, more or less, it's a zone. It's not a 1 pip line. Retest and a continuation higher. And it could maybe retest again either this zone, this fresh zone between these two candles. There's a fresh zone, or the breakout line again, or the moving average, the 50 moving average. That could also make or give it a dynamic support. So lots of support around here, and you can see the 21 moving average on the, sorry, the 9 moving average on the monthly chart. Looks like sort of a flag in a way. Okay, not a perfect flag, but there is a move up and then some sort of like a I forgot the word now, but sort of a flag or a sideways move towards the demand zone, towards the moving average. Compression, that's the word I was looking for. So some sort of a compression or you know, sideways movement before continuing higher, like a rest, a temporary rest. And if this occurs, then we could see some very, very nice moves with lots of pips on Swiss yen. Other yen pairs show potential patterns, but not as strong, not as clear as the Swiss yen. Pound yen is also starting potentially to move higher. Again, it had a nice test last month. The moving averages are starting to curl up and maybe even reverse next month. But this is the daily chart. On the monthly chart, you can see that it's already finding support on the 9 moving average. And we see 2 rejection bars or 2 rejection candles. And if this month, if the monthly candle of September closes as a bullish candle, it would be a nice confirmation for continuation. So this could be also a flag pattern in a sense on the monthly chart. So Swiss yen potential long-term long, pound yen potential long-term long, Aussie yen also maybe potentially. You see this sort of a doji candle as a reversal pattern that could, if we have confirmation in September, could also signal long on Aussie yen. Let's have a look at Kiwi yen because I said that Kiwi is strong. is a strong currency. So you can see, just one sec. You can see also that the Kiwi yen found nice support on the moving averages and starting to move higher as well. And on the weekly chart, obviously it has supply here. So if it continues higher, the first target would be around the bottom of the supply. It could move lower from here towards the moving average, or this resistance area. You see there's some sort of a retest already. So basically, yen pairs look very interesting in the long term for on the long term for long trades, and Swiss yen is one of them. Looks very nice only after a confirmation, a retest of this zone, or a clear reversal candle around either the resistance line or the moving average or this demand zone. Basically, this is it for today. I don't see any questions about any other currency pairs, but it was important for me to show you some of the trades or the trends for the long term. As I mentioned, the short term, a little bit unclear, lots of sideways movement. But I showed you some tools to look for short-term trades with retest and with a breakout and retest. Just be patient. The fact that you're sitting in front of the chart doesn't mean you have to take a trade. Money is made by sitting, not by trading. And it's not me who said it. I don't know if it was Warren Buffett or Charlie Munger or someone else, but be patient. Wait for the best signals. The fact that you're not taking a trade doesn't mean you're lazy or you're not, or you don't know what you do. Just taking a trade for the sake of taking a trade just because you're in front of the chart sometimes is worse than not taking a trade. So wait for the best signals, be patient, manage your risk properly, and have a successful trading week. Thank you for attending today's trading room, and see you next time. Thank you very much, all of you, for your attendance and your questions. Take care.